Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Closer Show. As always, I'm your host, Scott Carson, and extremely excited to have a very special guest today. He's new to the show, but we've known each other for a couple of years, dating back actually to an original crowdfunding university when crowdfunding was all the rage with the idea and that term. It came out about 4 or 5 years ago. But we're honored to have Joel Block join us from Bullseye Capital this morning. If you guys don't know who Joel is, you'll definitely want to pay attention. Joel is a seasoned real estate investor in over 25 plus years of experience in the industry of buying and investing in distressed assets. He is an expert on crowdfunding and syndications and doing some big projects. So, good morning, Joel. Thanks for joining us from LA this morning.
Hey, Scott, how are you this morning? Nice to see you.
I'm good, man. I'll take a little bit of the LA weather. It's been like a monsoon around here for the last week. In the middle of July, you wouldn't believe it.
Hey, son, man, it was 121 degrees here the other day.
Woo!
So we are second only to the surface of the sun.
I saw a post from somebody on social media talking about, oh, hey, here's the sun and here's Earth, which is closer, or California, which is closer than Earth to the sun.
It's shockingly hot, but it cooled down. It's come down 10 degrees every day. So it was 120, then 110. Yesterday was 100. And like today's gonna be 90, and I think it's gonna be like 70 over the weekend. It's the size of the swing. It's like 50-degree swing. It's unbelievable.
Yeah, it's always interesting here in Texas. We like to say if you don't like the weather, hang around 10 minutes, it'll change because we have those. They
say in Florida.
Yeah, well, Florida, you got God's waiting room and the 4 o'clock shower every day. So, yeah. Joel, for those that don't know who you are, take a few minutes to kind of tell us who you are, what your kind of specialty is, and what you guys focus on over at Bullseye Capital.
Well, listen, first of all, I've been in the venture capital and the hedge fund business. I've been in the money business for my whole career. I've been buying companies. I started in the CPA business as a youngster, and then went into venture capital. Well, I actually fell into at Price Waterhouse when I was a youngster. I was assigned with an army of other guys to do the tax returns for 500 partnerships that were buying real estate or some kind of assets. And I hated doing the tax work, but I just loved reading the partnership agreements. And I thought, you know what, this is exactly the business that I want to be in. This is perfect for me. So I quit the firm, started a little real estate syndication firm. We tied up our first deal. We cold called a bunch of doctors. We broke every rule there was. We did everything you're not supposed to do, but we were just kids. We didn't know any better. And we got our first deal up and running, and then we bought a shopping center, and then we bought this, and we did a total of about 8 deals, which worked out pretty well. And by about 1990, when the market started to change, I fell out of that and fell into a venture capital transaction. Now, once you learn how to raise money, raising money for real estate, raising money for venture, if you want to buy a yacht, you want to do a bridge, you want to buy a hotel, it doesn't matter what. Once you learn how to raise money, the skills are all the same. It doesn't make any difference. So I raised $10 million for this venture transaction and went to Wall Street. The guy that I had become partners with invented this concept. The two of this concept of delivering stock quotes to investors. Wait for it, by fax in 1990, by fax machines. Not even everybody had a fax machine back then, which was incredible. So anyway, but I succeeded in getting a large brokerage firm on Wall Street so excited about this that they bought subscriptions for us, and they wrote a check that was so big that our investor got all our cash back in 6 months. So it was a king size sale. And listen, raising money is all about success. So you raise some, you do good. You raise some more, you do good. You raise some more, and after a while, you can get all you want. And that's the reason why I tell people that you have to deliver some success in order to be able to raise some money. So it's the nature of the beast. But anyway, so I built that company. I ended up selling that company to a Fortune 500 company in 1995, and then I just started buying and selling other companies. And I stayed in the venture business probably for 15 or 18 years. And then in 2010, I started my Bullseye Capital Fund, which buys distressed assets, and we bought a note fund. We've done a lot of different things. So that's it. I mean, that's what I do. I'm in the deal business. I buy and sell companies. I mean, I've done what a lot of guys wish they could do, and I make it happen.
Good stuff. So let's talk about where do you see the market going at right now? Where are you focused on?
Uh, I go back and forth with real estate. I kind of have a love-hate relationship with real estate. On the one hand, it's a real stable asset. It's kind of a boring asset. I go back and forth. As much as venture frustrates me, I find venture more exciting. Real estate's more predictable. It's easier to understand. There's less moving parts. So I just go back and forth between those things. But, real estate, I think that the money's made in real estate, and that's where you got to make the money is in real estate. And so you want to count on that, whether you do it with the physical asset or you do it with the paper. I mean, there's a lot of different ways to make that happen. But real estate is a very dependable asset class. And, exciting or not, that's where the money is.
Good stuff there. Yeah, the market's changed quite a bit in the last 8-9 years on the real estate side. And I know you're big into following kind of economic trends too, correct? Seeing what's going on in different parts of that. Are you starting to see a change in the markets and things like that are affecting real estate? Because I know in California, it's crazy out there as price is going through the roof. We see that here in Austin quite a bit as well. Not extreme, but what always concerns me is when I start seeing, especially on the MLS with properties being sold, where appraised value will not dictate sales price is always kind of a concern. Where do you think things are going to go next?
I do a lot of media. I do a lot of commentary, on the media and, terrestrial radio and just, so kind of mainstream stuff. And real estate is largely dictated by jobs. If people have jobs, then people can buy homes. And if people can buy homes and they can make their mortgage payments, then everything is healthy. Other parts of the economy are a little different than that. But the real estate sector is all about jobs. California is a unique case. And we don't buy in California because California is very unpredictable. I mean, first there's a bubble, then there's a crash, then there's a bubble. I mean, it just goes back and forth. We built housing units in Austin. And that's a very predictable environment. Take a look at Austin, for example. So you got I-35 that runs right down the middle of your city. It's terribly narrow. It's a terrible freeway. It's old. It needs to be reorganized, but it's not. So anybody who works in that area, to live within a couple miles of there. So it's a guaranteed deal that if you buy real estate within a couple of miles of the university in that downtown area, that it's worthwhile because people have that's where the jobs are. The jobs are there. Now, you go further north, there's lots of choices. And so that makes the prices a little softer because there's a lot more supply with less demand. So, but in downtown, you have huge demand for limited supply. So supply and demand just always works. And it's very easy to. And that's a big part of how you have to think about real estate. So you have to look at every city. And what that means is you have to know the city. You can't just drop in from an airplane on a parachute and say, okay, we're going to buy some real estate here. You have to really know what you're doing. I mean, real estate is like anything. Listen, I don't want to say anything, is different than this, but you have to do it. It's a knowledge-based business. And if you think you can jump in and not know what you're doing, then you're a beginner. Professionals make more money in 5 days than other people make in 5 years. Why? Why is it? Well, there's all these reasons. We can see things other people can't see. We have knowledge other people don't have. And I'm not talking about, inside information. I'm just talking about we just have the inside track. We understand what's going on. And having been in the money business for a long time, I pride myself in knowing what's going on.
What mistakes do you see in people? What are some of the biggest mistakes you see people making out there as they're raising capital these days? Because I'm sure you see things that want to pull your hair. I'm like, what are you doing?
I'll tell you the first one. I have people, and they the first one. I would put it like this: just because somebody has money in their checkbook has nothing to do with them giving it to you. I mean, that may sound so obvious. Although maybe some people are saying, well, why would it be obvious? Listen, my fund, I run a fund, and we buy certain kinds of assets. So people will call and say, Joel, I have this thing. Why don't you give me some money? Well, my fund doesn't do that. Well, I don't understand what you're talking about. You have money, and I have a deal. Why don't you just give me money for that? Well, no, because we have an agreement with our investors that we're going to do certain kinds of deals. We have expertise in certain background and certain kinds of things. So the first thing you have to do is you have to line up what it is that you're doing with what it is that the person who you're talking to wants to do. Now, if you're talking to very sophisticated people who are harder to deal with, by the way, then those people are going to be much more specific. They're going to be much more concerned with yield and with the risk profiles. They're going to be much more concerned with very complicated things that you may or may not be able to answer their questions, which is why there's frequently not a love connection with these professional investors. Another thing is everybody thinks that they're going to get $1 billion. Oh, I know this billionaire and he really likes me. Let me tell you that billionaires don't really like you. They don't care about you. They don't need you. There isn't anything that little guys like us bring to the table that billionaires need. Billionaires have an entourage. Once a guy gets to a net worth of 20, 30, $50 million, an entourage starts to build. And that entourage is a stockbroker, it's lawyers, it's accountants. And let me tell you that those people, that's their gravy train. They are surrounding that person, not because the person pays them to, but because that's their meal ticket. And so they are going to surround that person. They're going to suffocate them, and they are not letting you in, because anything that we would do diminishes their ability to make money for themselves, because we're kind of on the outside of that circle. So you really want to deal with people that probably are in the $1 to $10 million net worth range. Those are people that are still building. Those are people that are still taking risk. Those are the people that really do need us because they don't have an entourage. They don't have a tremendous amount of alternatives. I mean, listen, I get a phone call every single day from somebody saying, Joel, you want to put money in my deal? Dr. Smith, he gets 0 phone calls. No one ever calls him. He doesn't have any access to any deals. So for that reason, Dr. Smith, he loves getting phone calls from the kinds of people that you and I know, the people that we deal with, your students and the people who are part of your mastermind programs. They love getting phone calls because they're going, you know what, all I know is that my stockbroker puts me in these cruddy deals. I want to get put into something that's exciting. They're not going to put in all their money, but they certainly they want to take a bite of the apple of something new and different. So I could go on and on, man. How long do you want me to go?
Hey, I love it. I guarantee people are enjoying it too, because it's one of the biggest things I think people see out there as well. Is like, oh, hey, I've got a rich friend, I know somebody's got some money in LA, or I'm going to go talk to them.
What does that have to do with anything? What does that have? Literally, stop, take a step back. Take a step back and put yourself into the shoes of the investor. What does the fact that they have any money have to do with them loving you and your deal? Mm-hmm. You have to get them to love you and your deal. And now, people call me and they want to talk about financing films. And listen, I'm getting on the phone in a few minutes with a guy a pretty substantial guy, by the way, runs a radio station. He's got networks. They're connected at the highest level of government politics. And they got people in the White House. And, and they want to raise some capital. He wants to know how. Well, what I told him is, who are people who like your concept? Mm-hmm. Those are the people that are likely to put up the money. They're the ones because they have an interest. Crowdfunding didn't happen the way that we all thought it would, but there are things about crowdfunding that are accurate. Number one, different people like different things, and you have to find the people that like your things. So, for example, people don't have to know how to do notes, but they have to understand a little bit about notes in order to say, you know what, I'm interested in moving forward with this. I'm not talking about the guys that are buying the notes. I'm talking about the passive investors. And here's the other things you have to understand is that when I raise money from passive investors. Your guys are all active investors. So syndicators, the guys that I deal with, all my colleagues, they're all active investors. And we need passive investors to fund our projects. And a passive investor is just somebody who writes a check and sits back and collects a dividend. That's basically what happens. So, we just have to be clear about that. And you have to be looking for the right thing. You have to deliver the right message to the right person all the way around. It's there's a rhythm to it, and once you learn how to do it, you can get good at it. But most people make such silly fundamental errors that they never succeed. And that's kind of a bummer because, it slows them down.
Yeah, I would agree to that. You can hit the nail more on the head like that, as well as if surround yourself with people that like you, they're going to love you, love the concept, understand the concept, and willing to write a check. Because most people don't want to do the work; they'd rather just sit back and do. They want to build a car; they just want to ride it.
Yeah, right. And listen, there are drivers and there are passengers, mm-hmm. and neither one is better. If you're really good at doing the driving, then make a living out of it. You know, if you're really good at buying notes, buying real estate, doing deals, then get other people to fund it. And let me tell you something, there's more money doing that than you could ever dream of. But on the other hand, you can't be a beginner. Investors are not going to give you the money if you're a beginner. One of the things that, you know, I always say is that investors are just, they're funny about letting you practice with their money. In fact, a little examples. There's a reason that doctors practice on cadavers. You know, they practice on these low value targets. They make a mistake, doesn't matter that much. You know, I mean, you can't practice on the real thing. Investors are just not going to say, well, how many deals have you done? Well, never done any, but how hard could it be? You know, I mean, imagine going on an airplane and the pilot comes out of the cockpit and says, hey, ladies and gentlemen, today's my first day. Didn't have a lot of time for training, but how hard could it be? I mean, right? I mean, this is everything in our world is complicated. Everything that we do requires expertise. I don't care if you're buying notes, buying real estate, operating on people doing brain surgery. No matter what you're doing, it requires expertise to be good at it because all the people around you are good at it. And if you're not at least as good as them, you're going to get washed out. That's the way it works. That's why you need to take training. That's why you need to be surrounded by experts like you to teach people how to do the kind of things that you do. Because if you don't have the competency at least as good as everybody else, then you're going to get washed out. That's it. So you need to get better. And then the better you get, then the more capital and other things you're able to attract. So all the way around, you have to do it. And if you aren't willing to invest in yourself, then go get a job or do something different.
Good, yeah, good points. I mean, I had great mentors starting off. I know you did the same thing as well. People you learned from and kind of helped you show you the ropes as you got better. And you went from, you know, low level assets and building up to get where the point where you're at today. It's not going to happen overnight.
Right.
But if you keep working on it and keep honing your craft, you'll eventually get good at what you do and be an expert, right?
Right.
One of the things that you have done in the last couple of years, and I've admired this, is you are actually putting together an annual event to kind of help out with people of that, right? You want to talk a little about your syndication and hedge fund symposium?
Yeah. Twice a year we put on a conference, and actually in October we're doing our 21st national event, which is pretty extraordinary. I mean, the fact that we're doing it for the 21st time, I can't believe it. I'm freaked out by it because it's not really my business. My business is running the fund and doing the things that we do, but I got a call from an executive at Marks & Millichap, which is the largest commercial real estate brokerage in the country. And the guy said right on the heels of the crash in the late 2008, whatever it was, the guy said, hey, listen, can we bring you out to Florida to do a conference for us and show us how to raise capital to buy real estate? Because most people just don't understand it. They don't understand how Wall Street organizes the money. They don't understand where the money comes from, how it works, what happens. And so I go out there and did this conference, and it turned into our syndication hedge fund symposium. Twice a year, we take 50 people. These are people that are pretty sophisticated in real estate, either notes or real estate, or they could be venture. They could want to do film. It doesn't really matter. But, you know, we show them the inside of how putting deals together works, how the investor gets paid, how you get paid, how you charge fees, how you keep control of the deal. I mean, everything about how the deal works, we show you how the whole thing works. There isn't anybody in the country that puts on a program that's quite like this, because I've been doing this for 30 years. It's my life is running these deals, and I show people how it works. So what happens is, if you're buying notes or you're buying real estate and you're cobbling together the money from hard money lenders, private lenders, whatever, eventually what you find out is after you get better and better at it, hey, listen, I'm pretty good at this. I should be making more money. Now, granted, when your first deal, you're lucky to make anything. You're lucky to get an experience. So whatever they charge you, you just take the money and you do it. But after you've done it 5, 8, 10, 15 times, you're saying, hey, listen, I'm pretty good at this. My risk profile has improved. I'm not a big risk to these lenders anymore. They should give me a lower price for the money. So you go back and you say, hey, listen, I should get a lower price for the money. And the lender says, well, yeah, you are pretty good. We don't need to control it quite as much. We don't need to supervise it quite as much. You've been paying us back every time. Fine, we'll give you a lower price. But there's a certain limit to what they're willing to do. They're not going to take you down to the floor. They're not going to take you down to nothing, right? They're going to, they still need to make their profit, which is going to be, still 12, 13, 14%, whatever the number is. And so what you want to do is when you get to the point where you have really good solid chops and you're good at this business, it's not only the price of the money, it's also the supervision and the control. Because the people who lend you your money control your business. I mean, that's just the reality of how it works, and it's well known that that's how it works. And so here's what happens. So let's say you get a deal, you call up your lender, and you go, hey, listen, I've got a smoking hot deal. I need 100 grand. And the guy says, oh God, too bad. I'm all tapped out right now. My money's all loaned out. Call me next week. Call you next week. The deal will be gone next week. So you just lost an opportunity to take care of your family, which is really not good business. I mean, now when you're a beginner, that's how it is. But as you get more seasoned, you shouldn't have to tolerate that. You should have your own storehouse of capital where you're ready to go all the time. You don't need to call anybody. So you want to get investors to give you the money where you hold on to it in advance. Because let me promise you that when you show up at the table with the cash, who's going to get the better price? You or me? If I show up with the cash, and you got to scramble around for it, and I'm ready to go in 5 minutes, we know how it works, right? I mean, you've been around the block enough times. The guy with the money is gonna get the deal, and so that's the reason that investors, if you're good at what you do, and you can demonstrate that you're good, then you put out an offer to them. You say, listen, we're building a fund, and here's what's gonna happen. You put the money in, and I'm gonna go out and I'm gonna do what I'm gonna do. You're gonna get paid, and I'm gonna do all the work, and it's a great relationship. And that's the way it works. And that's what we teach people how to do at the symposium, is put together funds. And we've put together probably more funds and syndications than probably almost anybody in the country. We've done, 50 or 75 funds. We've done 125, 150 different syndications. So we've done an awful lot of volume of stuff. Our guys have raised hundreds of millions of dollars, and they're out there doing tons and tons of deals. And they're, and what's interesting is a lot of them, Scott, are guys like you that they're the educators. And so what they'll do is you'll say to an audience, people, listen, if you like what we're doing, go over on the right and I'm going to show you how to work this. But if it's too much work, then go over to the left and just put your money in the fund. And so, it's it just increases the number of opportunities and ways that you can work with people. So a lot of guys that you've heard of and that everybody who's listening has heard of are our clients. I don't name drop, but that's just suffice to say that we've built funds for a lot of those guys.
Yeah, it definitely. I know some of those, and so definitely a well worth event. What's the next one? Is it? It's in October, isn't it correct?
Yeah, I think it's October 22nd. I think it's 21, 22. It's a 3 or 4 day event. And actually, we're actually tacking on a special 1 day extra thing. It's using social media to attract investors. So we're adding on a whole other thing. It's just we talk about building the fund, but there's a particular guy that I've become very good friends with that is just really, really great at Twitter and Facebook marketing and some of this other stuff. And, using the legality, because, as much as crowdfunding didn't blow up the way we all thought, there are laws that make using the social media networks legal. And so it works. And so we can take advantage of that.
Yeah, because that's one of the big things that I think was just drilled into our head with Scott Purcell at that crowdfunding event. It's still all about the crowd, all about growing an audience and getting them excited about what you're doing. You can't be just sitting there, be the Unabomber in your house, not doing anything, getting out and be not social. You still got to get out and talk to people to raise capital. Now,
that's what marketing is. Marketing is really about assembling a crowd or a tribe of people who like you, that trust you, that follow you, that think that you're the cat's meow, and you make it happen.
Yeah. Question for you. Is there an amount, because there's costs to go with putting a fund together. Is there a dollar amount with the funds that you've helped people create that makes it worthwhile at that point? Because, you're not going to put together a fund for a $50,000 deal or a $500,000 deal. I've always kind of said that if you've done around $5 million in private transactions, that's really when you need to probably start looking at it. Do you agree, disagree? Think the number is less?
$5 million in private capital is a lot. It's a lot. It's a lot harder to get there than you think. So I would tell people that it probably the early break even starts at probably between $300,000 and $500,000.
Okay.
And so you got to raise $300,000 to $500,000. And then here's the thing about a fund is a fund grows over time. It doesn't, so you have a window where the fund is open for investment. And so, you got to raise your early amount. Let's say it's a couple $100,000. You got to get in the fund for it to open. And then once it's open, then you can keep adding, 50, 75 people come in, you'll meet people in your life. They go, I'll put in 50, you'll put in 75, I'll put in 100, whatever. I mean, basically all we're doing is we're taking something, we're slicing it up like a loaf of bread, and they just buy a slice, whatever slice they want. And so over time, your fund will grow from, 300,000, 500,000 to 750 to $1 million. Next thing you turn around, you got a couple $1 million. And so, you're deploying the money all the time. The thing is that a lot of people, they pull numbers out of the air like 5 million. Well, forget about the fund. If I gave you $5 million today, could you deploy it right away? Well, if the answer is no, then what would you want $5 million for? Because you have to pay the investors, the equivalent of a dividend. The money's not free. I mean, it's less painful than a hard money lender, but it's not free. I mean, you still have a responsibility to deliver some return. So why would you do that? I mean, that's really what the question is. So long and short is that it probably starts 300,000 to 500,000. It grows from there.
Yeah, and I meant like the total size of the fund at over time. And there's always stair-step provisions as you get in $250,000 to deploy that, stuff like that. You don't want to wait till you have the full $5 million to fund something. But there's a lot of people that when they start off like, oh, I'm going to go put a fund together for one property. That just doesn't make sense with the cost of stuff.
Well, that wouldn't be a fund. That would be a syndication. A syndication is a project. A fund is a pool of capital that's discretionary. You can go buy assets with. Now, I'll tell you, it's harder to put together a fund than it is a syndication. It's harder to raise money for a fund than a syndication project because, people, you say, listen, we're buying this apartment building. Oh, perfect. People like to go touch it. They like to look at it. They want to drive by it. I'm not quite sure why, but, because they don't really know what they're looking at anyway, but that's kind of what they want to do. A fund, they have to trust you more. Because a fund is really it's unknown, it's unclear, and they really have to kind of trust that you're going to do a good job.
Yeah, and it just takes obviously having quite a bit of experience in that specific narrow class for the most part, right? You don't want to be a jack of all trades in your fund. You want to kind of have it narrowed down.
Well, you want to set up what we call a charter. So you say, okay, we're buying apartment buildings B class in the western part of the United States. So you want to set up some parameter. You don't want to say we can buy anything we want, anytime we want, whenever we want, wherever we want. Just give us the money, and then we're going to decide what we're going to do. People are not going to give you that kind of discretion because even though legally you sort of have that kind of discretion because the fund is able to do pretty much anything that's legal, you start going outside, your expertise, and you're looking for trouble. So if you're really great at buying restaurants, then say we're going to be buying, restaurants of under $5 million in this part of the United States. You have to tell the investors what you're going to do so that they can reasonably say, we like it and we want to do it.
You ever run into any problems with your funds or any issues along the way that you had to kind of take a left turn or about face to try to fix it?
Yeah. I mean, listen, it's the deal business. I mean, every single deal has problems. And, sometimes, we bought some assets that didn't work out too well and we're liquidating those assets, and that's, has not been profitable. So, you have to take some lumps, and you got to let your investors know that there are some lumps. I mean, so listen, it's real. I mean, it's what it is, so every day is not roses and flowers, I mean, it's you do your best, but every day is not perfect.
Right. And communication is key, more so when you have issues than when everything's going well, right?
Yeah, that's it.
Cool. So you have your event coming up October 21st to 24th in Las Vegas.
Yeah.
I think last year you had one of them at the Tropicana. Is that where you're having that again?
Yeah. Yep.
Gotta love it. I love it. They've done a good job with the renovation out there, and it's nice that there's a event going on in Vegas again that time of year versus there used to be one that's not there anymore. So that's good that you're there. And when's the other one? You said you have one of them twice a year, both in Vegas?
The second one in April. I mean, it moves around different places. Typically, the October event is in Las Vegas, and we move it different hotels and different places. So the venue will determine the venue. But the one we just had was in New Jersey because we wanted to do it in the Northeast, and we got a whole bunch of different kind of people than normal. So and we always save some space for alumni too. The networking, it's such a powerful event because number one, people have to qualify to get into our event. It's not just anybody just can't come. You have to meet one of three criteria. Either you're a real estate professional licensed in some state, and that is really because you have to really either understand, or number two, you're a financial or intermediary type person, CPA, attorney, banker, lender, mortgage lender, whatever, because you either have to understand the real estate or you have to understand the money, one of the two, because there's a lot going on. If you don't have a background in one of the two, you're going to really struggle. And the third alternative is that you have expertise in a certain asset class. So you're an expert in notes, you're an expert in rehab, you're an expert in student housing. So you have to have some background. And the reason for this is that if you don't have one of these three backgrounds, number one, you're going to struggle with the material. But number two, investors aren't going to give you any money. Mm-hmm. They're just not going to, if you don't have the chops, they're not going to give you any money. So don't bother taking a seat that would belong to somebody else. It's a very small event, 50 people. We do it very much on purpose. People get to know each other. The networking is very powerful. Las Vegas is likely to be a little bigger than that, just because it's our 21st national event. There'll be some more alumni that's going to come, and just some other guys are going to do some stuff. That's really awesome. But, we do some role playing. We pretend, let's say, that we have a deal. Guys will come up in front of the room and they'll pitch their deal to the audience who pretends to be investors at a country club, and and then they practice, and we talk about how to structure transactions, and guys leave understanding how this business works. There's nothing for sale. It's not a carnival. I mean, people come, they pay, they learn, and it's for the most serious people. So if you're serious, then then this is something you want to think about.
That's I'm glad to hear that. That's always the great thing, is that you can actually role play and work through things. Just a lot of people just, I'm just going to put a fund together and wait for them to start rolling in through the door, wait for their phone.
I could go on. I wish we could do a whole segment on all the funny things that people think, all the stupid things people do. But here's another one. Is Joel, listen, I really don't want to learn how to do this. I don't really care about any of the stuff you have to say. Just introduce me to a rich guy and I'll do the rest. And the answer is no, you won't. You're not going to be successful. I've had guys, I can't tell you how many guys have come to our symposium that they call me up and they go, hey, listen, we've already got everything organized. The attorney already did all the work and all the stuff. And, well, how's it going? Well, we haven't raised any money yet. Well, what's going on? Well, I don't know. I just can't. It just seemed like something's going on. I just can't get the investors to say yes or whatever it is. And why not? What's the problem? Well, for some reason or another, what ends up happening is that I look at their docs and I'll say, well, listen, the reason that the investors aren't coming in, it's too restrictive. It's too investor unfriendly. You got this problem. You got that problem. And they're going like, well, our attorney told us to do this. Well, attorneys, are not in the deal business. Attorneys are in the legal business. Attorneys shouldn't be giving you business advice. They shouldn't be the one telling you how to price your deal, how to pay your investors. That's not what they do. They aren't sensitive to what the market is. They aren't sensitive to a lot of the big issues that we're all dealing with every single day. And so you really want to be very careful who you take your advice from. So for all sorts of reasons, listen, people come out, they learn a different skill. You have to come out open-minded. You have to come out and really understand, how it works. And once you do that, then, people come away and they go, wow, boy, I really have been making a lot of different mistakes. And there are a lot of mistakes that people make, a lot of mistakes.
Yeah. And it's putting people in a room to kind of mastermind together with experience and things like that to really kind of help them see the things. Because if we're so close, we often can't see mistakes we're making.
Well, that's the power of the network, is that people then meet each other. And what ends up happening is that, 6 months from now, they put their deal together and they'll have friends to call and say, listen, hey, I'm putting together a deal. I'm buying a piece of real estate. I'm buying this. I'm buying that. You have anybody you want to put in my deal? I might have somebody put in your deal. Here's another thing, is that when you have a self-directed retirement account, let's say we each have our own, I can't put my own money into my own deal. So I have to put in other people's deals. So people invest in each other. So there's a lot going on, and the value of the network is tremendously powerful.
I could not agree more with you on that, because it's really important about getting out and just talking to people, networking, learning from mistakes, but also see what others are doing, because you never know what's going on, and sharing the knowledge that everybody has coming from different arenas too.
Right. Exactly.
I have a kind of an oddball question for you. Do you host at the end of October so you make sure and watch the World Series?
That is exactly the reason. You wouldn't believe that. That's exactly the reason that I do it in Las Vegas, because I love to watch the World Series in Las Vegas. And, I'm a longtime Dodger fan. I'm a season ticket holder. And this year, if you could believe it, for 29 years, we haven't been in the World Series. I had World Series tickets, and the World Series tickets that I held were right during the symposium, and so I couldn't go. But
Oh.
but it turned out okay. Because I got Game 7, and we went all the way to Game 7. So I got to go to Game 7. It wasn't a great Game 7, by the way. But it was.
I had to wear my Giants shirt today for you a little bit there.
It was a joke all the way through the whole symposium that I didn't get to go to see the. I was supposed to be at Game 2. We actually all sat and watched Game 2 in the lounge all together. So it was fun.
I was in Vegas at Caesars for the couple games of the World Series, just out for some fun. And I was thinking about that. I was like, where's Joel? He's got to be around here somewhere.
Yeah. Well, listen, if you follow me on Facebook, you know I'm out at the ballpark all the time. So.
Oh, yeah, definitely so. Well, hey, Joel, I don't want to take too much of your time. I know you got a very busy day. I want to say thank you for joining us here on the No Close Show podcast. For those that want to reach out to you to get more information, either a fund or the upcoming event, how do they reach out to you?
They can learn more about the symposium by going to dealmakingsymposium.com. They can go to bullseyecap.com. Bullseye Capital is my company, so bullseyecap.com. Or they can just find me online. I'm very easy to find, Joel Block, and just look me up, and I'm out there.
Good stuff, man. Well, hey, man, have a great day. Thanks for being a part of it, and we'll touch base in the future. I'd love to help you out if you need some help marketing the event. Glad to help you out with that as well.
Hey, listen, we'll do this again. If you got more questions, I mean, these kind of questions are fun to answer, and I'm sure some of your folks could. Unfortunately, they're all. I don't mean to make fun, but they're all making these mistakes. So let's help people not make these mistakes and be more successful. I mean, listen, if people had more money, more capital, they could do more deals, and they could use more of the stuff you teach them how to do. So these things all work together, the capital and the deals and the skills, and you have to master. First you got to kind of master the underlying skills, but once you do that, then you got to master the money. And, if you don't master the money, you never get to the next level.
Great point there. Well, hey man, have a great day. Wish you Dodgers well. Go Giants. and we'll talk to you later. All right, man?
All right, buddy. Take care.
Thanks, man. Bye. All right, guys. Hey, that's going to wrap it up for this episode of the No Close Show. Go out and make something happen. Like Joel said, hey, master your craft and master the money. And that's where really the magic of it is, bringing the money to the deals. So you got to master both of those to understand and really identify opportunities in the market, not only for yourself, but understand what your investors are looking for and have them fall in love with you or what you're focused on. So have a great day, guys. We'll see you all at the top.